Now you look at a lot of app chains and they never got that viable business model that people wanted to use. So they're left inflating to all hell. And then you pull up the token chart, you're like, app chains are a failure. Like, no, the business was a failure. It's not about the model, it's about the business.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed. What's up, guys? Welcome back to another episode of 0x Research, where I'm joined by Danny, Darren, and Dan Smith from the Blockworks Research team to talk about all that is happening in crypto, the markets, DeFi, NFTFi, GameFi, and everything included. Before we get started, I just wanted to mention that Permissionless Free is coming up, and if you want to get tickets for that, you should use code 0x10 at checkout, because it will make people happy with me and the podcast, and we can keep going. All right. Danny, do you want to get us started and share?
Yeah. Potentially exciting news for ETH enjoyers out there. We did see the first day of no outflows from the Grayscale ETH product yesterday on the 12th. I think there's a couple questions here. If you look at the inflows outflows across the board, across all the major ETF products for ETH today, they all saw pretty muted flows in comparison to the last few weeks. So it might just be a question of whether or not that was just a slow day, and so therefore there just wasn't much to move for ETH itself. But we did see, if you look back to Bitcoin when it had its ETF moment, the launch and subsequent month or so, we saw significant outflows from the Grayscale BTC product, and then at some point there was kind of a flip there, and that I think somewhat coincided. You'd have to go back and chart that out, but there was a little bit of coincidence there with then a sort of reversal in change in what BTC price had been doing at that time. So, for the ETH lovers today, maybe this is that moment. Maybe it isn't. Maybe it was a slow day and we'll see more outflows tomorrow. I'm curious on anyone else's thoughts here. Do we have some kind of, is this a tipping point for ETH now that, Grayscale ETH flows are out of the way for the most part, or do we have more, pain to come?
I can't specifically talk about the flows, but I will add that I don't think that the pain is over for ETH. At least in the short term. I feel like it doesn't really have the identity that it once had. I've always been an Ether bull. If you go on my tweets, you will see that. I think Ether is God's currency. Unfortunately, I have become a bit disillusioned with it. Potentially a bottom. But I don't know, Solana does it very well, and I'm sure Daniel Smith will talk about how well Solana does it at some point, but it does. It's high throughput, it's fast, it does everything you want it to do. Bitcoin is exactly what it needs to be. It's digital gold, no matter how much you believe in that. And Ethereum's kind of in a weird place. And it's not it's kind of in the middle of the two. It kind of wants to be a store of value, but it also kind of wants to be the app store of the internet. It's not doing either of those particularly well. I mean, if you think about it, I guess eventually it might be a better digital gold / store of value than Bitcoin, just because of the way emissions work. I don't know if everybody knows what's going to happen with Bitcoin after the cap is reached. But yeah, not related to outflows, inflows, just something that I feel like everybody's been thinking about over the past 3 weeks, and I just wanted to bring up.
God's currency, huh, Baco?
Yeah.
I mean, we'll see. I don't know. It's been interesting to kind of think about the valuation angle of these L1 assets. That's obviously something that's oft discussed, but I think there's definitely a commodity value piece of that value equation. I think it's a super hard thing to achieve that probably has some exponential qualities to it. Meaning, for a long period of time, you get no value from trying to be money. But if you successfully pull it off, you get extreme value. And maybe Bitcoin's an example of that. I don't necessarily think it's more on the money side. And I think people prefer it for more of that store of value side. But directionally, I think that both falls under the umbrella of that commodity value side of the equation.
That money thing is, everybody wants to become money. Every roll up provider that I've talked to, every modular whatever network, Tia was the first one that did the like modular money meme. But since then, at every single podcast that I've been on, that I've listened to, every protocols like documentations that I've read, there's some form of mention of, oh, we want it to be money like. The Cosmos people will say, oh, we want it to be capital like. I think they think that makes them a bit more special. But that's like the ultimate goal, and I don't see how the majority of them go for it. I don't know. I don't. I'm curious to hear what you guys think as well. But
Yeah, I mean, it makes sense for some blockchains that are maybe more generalized and have a large amount of economic activity occurring on them to kind of play into that direction, right? I think Ethereum is a good example of that. Even with the L2 roadmap, I still think you can make that work, right? And that's what it's trying to do is create demand for ETH, the asset, from the activity happening on these L2s. That's both in as like a gas asset on those chains, so the transaction fees kind of reflect the level of demand, but also as an asset within these economies for being a how you buy and sell NFTs or other goods and services, or how you use as a base parent. Index pools are always the common examples there. Maybe like Zora is an example of doing something a little bit more interesting. They launched a new Sparks, like on their consumer app. They have Sparks. I think Sparks are literally just like subdivisions of ETH, just like Way or Gwei, but with a more exciting name and obfuscating away some nerdy terms from the user, which is probably pretty powerful. And so even though the user doesn't necessarily know they're using Ethereum as this asset, and it just feels like an in-game currency, if you will, that is still creating demand for ETH the asset on the back end, and I think that's important too. When you look at something like Celestia, that looks and feels it's going to look and feel just the same. In the future, like maybe so not today. Again, going back to the point I made earlier about there being this like exponential payoff curve of building into this like moneyness like quality for a long time, you're not going to get any value from that. So I think for Celestia, it'll look and feel a little bit different once there's a richer ecosystem built on top of it. Today, it's really just like a couple gimmicky rollups, and Eclipse is coming live, which will be it's like a first unique chain, I'll say. And unique meaning, it's the first SVM rollup, which will be interesting. But at the end of the day, they're trying to be a general purpose chain, which we have a lot of. So we'll see how that carries weight over in that ecosystem. But yeah, it makes sense for Celestia to try to play this game as well. The interesting thing with Eclipse, as it relates to benefiting Celestia, is Eclipse will actually be good for ETH demand, right? It's like settlement layer, if you will, is on Ethereum. So its bridge contract is pulling Ethereum-based assets onto the chain. So it'll be interesting to see how they go about pulling TIA onto the chain. ZK accounts aren't quite live on Celestia yet. And so I assume it'll be like the bridged version, maybe using like something like a hyperlane or like I don't know. It'll be interesting to see what kind of wins out there. But nonetheless, I do think it makes sense to play into that moneyness aspect.
let's talk about. Well, I want to ask Dan about his
Go ahead.
Celestia thesis. This is something I brought up a week ago to him, but I want to hear it on the pod.
Yeah, I'll pull up the Blockworks Research dashboard here. I think it paints a good picture of where Celestia has been and potentially where it's going. So let me share screen here, but I'm excited about Celestia today because it has seen a bit of a resurgence in activity with the launch of Eclipse, right? And so it's actually useful to compare side by side demand for Ethereum and Celestia. So this is Ethereum, what we're looking at right now. You can see this chart on the right here is the amount of data in megabytes posted per day by various chains. And so, you see on an average day, we're somewhere in the neighborhood of like, I don't know, 1,500 megabytes of data. And we look at Celestia, we historically have been much lower than that, somewhere in the neighborhood of about 500 or so. So maybe about 25% of the market. And then recently with the launch of Eclipse, effectively, that number has doubled to about 1,000 to 1,200. And so it's going to be very interesting to see how that number changes going forward, and why I think there's an interesting likelihood that the narrative shifts a little bit for Celestia. Is Eclipse is in developer mainnet today, so it's, there's not, most blocks are empty or with just one vote transaction, for that's how the SVM works. And so this is basically just the bare bones minimum amount of data that Eclipse needs to post in order to function. And once you see mainnet go live, and there's probably some incentivization program, I would suspect, I think you're going to see a large increase in activity. And it doesn't take much activity for Eclipse to like essentially fill Celestia's existing block size. So today the block size is 1.88 megabytes, and we've seen Celestia hit 10% capacity. And again, this is with very, very minimal amounts of activity. And so my short-term thesis on Celestia is you're going to see an upswing in activity that forces an increase that drives the utilization of current block space higher, which will drive an increase in the block size. So validators can vote to increase block size basically anywhere from where it is today at 1.88 megabytes up to 8 megabytes without any like forks or anything. It's just like a votable parameter, governance controlled parameter. And so I think you're going to see people kind of reconsider their prior Celestia thesis. And, and to be fair, this is the first time we've seen meaningful usage on Celestia. I think it got a ton of overhype when there was a time in the market where everybody was like dying for something, and we basically had like one person tweet out, "Hey, like Celestia is really the narrative right now. There's an ecosystem that needs to be built on top of it. Staked TIA is like an exciting play because of airdrops." That never really formulated, but CT took to that and took it as their truth. And so I think it got extremely overhyped, and then that turned into disappointment because this protocol like that needs to build a very, very large ecosystem on top of it was like 2 months old, right? And now you fast forward to today, we're like 6, 7, 8 months old, and actually starting to see some of the major players go live. So the Eclipse is really the catalyst for Celestia in my mind. And another one I'm watching closely will be the launch of Argus. Argus is being built by Scott Sonardo. It's like a dedicated infrastructure for blockchain gaming. I'm not the biggest on-chain gaming fan, but one thing about gaming, it is very DA hungry, very, very DA hungry. Lots of transaction data to build on-chain games. And so now you have an alt VM rollup that is going to start violently consuming data once full mainnet goes live, alongside the upcoming release of a very DA hungry gaming application. It starts to get pretty exciting on like what this will look like. Now, that said, the economics here still leave a lot to be desired. So if you like, Solana basically sees the most transaction activity today. And if you assume a max transaction size of 1,232 bytes, that's a limit set by Solana, 800 TPS, and an Eclipse's compression factor is roughly 2.5 times. So that all boils down to if you wanted to post all of Solana data today onto Celestia, it would cost about $1 million a year. And so the question is, all right, well, if we assume that there will be a vibrant ecosystem, and we see that level of activity being posted on to Celestia in the future, like how many Solana-sized ecosystems is it going to take to kind of justify an investment in at this valuation? And so if you assume like FDV is like what, 6 billion, T plus 1 year, T plus 2 year valuations probably at this price is, with considering emissions and unlocks, somewhere in the neighborhood of like 3 billion. Then you can kind of back into like a desired price to sales multiple based on that revenue. So I don't know. Like, are we going to see Solana-sized ecosystems launch on Celestia in the near term? No, we're not. But we are going to see existing block size get hit and have to be expanded. And I think that's like an interesting catalyst to pay attention to from a markets and speculation perspective in the near term.
I like actually the past two kind of tangents that or not tangents, but topics that you've gone through here. Sort of like this combination of, you're calling this thing moneyness. I think it's more like narratives and like meminess of things. Like I think, people often, when they talk about Bitcoin as well, it's like, you can talk about the description of like how many tokens there are and other things like about the factors of what Bitcoin is, but ultimately it's like getting people to agree on what this thing is as sort of like a cultural money meme. And if you think that that's like interesting enough, you'll hold it in the same way that like people tend to hold dollars because there's like this general usage and acceptance of it within the world. But if there was not, acceptance or usage, then maybe the dollar meme would not be as strong, like with other currencies in different countries. I think you see the same kind of dynamics play out with ETH, with like ultrasound money. L2s are going to save the world, and then maybe those things don't play out so well. The narrative doesn't work as well, and then people go back and look at the fundamentals, and they have to have the question of like, how much value can I place on the value of the fundamentals in relation to the meme? And I think TIA is a similar example you just described of like people were riding high on like the meme of modular money, the memes of like staking and the value that has. But, that's very like attention and like momentum based. And when that kind of simmered off a bit, it's, like you just said, when you look at the data requirements to have like a profitable business, it's a far different picture than like maybe what the memes would suggest.
Yeah, that's a great point. And to be clear, like DA is probably not the only value driver that will exist in the long term either. But it will be in the near term. Eventually you can do. Celestia has this idea of like what is it? Fast blocks, slow squares, where it kind of enables the blocks to be quicker, but the DA process to be slightly slower. Just because that's a little bit more intensive for light nodes, and that's kind of the whole point of data availability sampling. But the faster blocks would enable something like a shared sequencer. There's kind of like a dynamic there of like, okay, well, shared sequencer networks will be built on top of Celestia. So if you're not a first mover there, then you kind of end up cannibalizing some of the things that get built on top of you if you were to go that route in the future. So that's a consideration. But point being, DA doesn't need to be the only value driver for like fee driver, I should say, for the chain either, but it is today.
But I was going to ask a question. I want to hear some thoughts on, do we think that, so like today we still have some, there's lots of L2s, roll apps, app chains, whatever you want to call them, that are popping up, and like obviously DA and different solutions are coming to market on kind of building these modular chains. Would there ever be a case for someone like a Solana, or pick your other chain that like Sui, Aptos, Avalanche, to replace what they have existing today and make use of like a TIA for data availability? Does that ever make sense? Or like, are they differentiated enough to like they believe in the strength of their tech enough to that they can kind of continue to outcompete as like their own full stack solution?
Before I think like Dan gives the right answer, I want to say I feel like one major cope that a lot of DA lovers say is that, oh, you can use like multiple DA layers. It's actually better because it's so cheap. And I feel like that's what people try to do. Like, oh, like why? If you're a chain and you're already using like yourself for data availability, you can just post it to another DA layer as well, and it's cheap. So it's just like extra available. It's extra safe. I don't think that makes any sense. It's like, because if like your chain isn't doing your own DA, then it's like you have bigger problems. Your chain's just not working. So that doesn't make a lot of sense to me. That I feel like that's the cope, but to me it doesn't make any sense. Like I guess you could, but why?
Yeah, I mean, if so on the your point, Boccaccio, first, like you do get some interesting interoperability enhancements if you're using the same shared DA layer as another chain. That said, like if you make an announcement that you're using 7 different DA layers all of a sudden, and 6 of them don't use, you're the only chain on, like, okay, that's probably not for the interoperability factor. So I don't know. Yeah, I mean, I think directionally I tend to agree with you that that's just mostly noise. And Danny, to your question, it's interesting. I think you will see L1s move to rollups and kind of use the DA structure again, because it is so cheap. It is very, 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 very cheap, and it's only getting cheaper. EigenDA isn't even live yet. That'll be cheaper and potentially more scalable than Celestia in the near term. Near DA is already cheaper than Celestia. And all that's to say Celestia is 10x cheaper than Ethereum. It's literally $1 on Ethereum, 10 cents per megabyte on Celestia. So it's only getting cheaper.
So in your view, would it be better for an L1 to become an L2, use some DA layer, right? And then the L1, now L2, just like makes money primarily off of its execution and does some like some like MEV shenanigans, like Arbitrum's like time boost proposal, right? Like having an ordering policy where they make like some extra money off of that as well. Does that make sense? Or
Yeah, I mean, the question is like, what is you said, I think you said better there. And like, it's an open question of which construction's better. It's definitely not clear at all. All right. If you wanted to go be a roll up today, okay, well, you're going to have a multi-sig and a security council because I think Fuel might be the only one that doesn't today. And you can see how much activity is going on Fuel Network today. Right. And so what's that was an unintended shot. I didn't mean to make that so aggressive, but the point being is,
I like Sway, man. It's a cool language.
it's a cool name too. But yeah, I don't know. Like, what's the proper construction? It's tough to say. Like, neither of them are solved, right? Ethereum has very much not figured out its end state as far as what the L1 construction looks like. Vertical trees were like the plan, and now it seems like there's a move away from that. And Resnick and Tolley are pushing in the direction of MCP, or multiple concurrent proposers, for both Ethereum and Solana respectively. And like, decentralization is obviously the question for these L1s, and like Sui and Aptos have constrained validator sets because of BFT consensus, and all-to-all communication has a practical overhead, and so they can only have roughly 100 or so validators in their current state. So they have to answer that decentralization question in a different way. Solana has like 1,000 or so operators today. Is that a sufficiently decentralized chain? Maybe, maybe not. But it's not like it's ripe without its own issues either, right? And stake-weighted QoS is like arguably a centralizing policy, and that's kind of the direction they're moving in the near term. So it's really, really tough to answer that question of like which one is better. I think if you were just like launching an app chain or something today, you could probably make the argument that the roll app direction is a little bit more lightweight. And the other piece here is like decentralization in terms of validator count has a cost. You have more machines you have to pay, right? Like if you run a single sequencer, you have one thing to pay off, and that's generally run by the foundation behind the project. And they're not trying to make money off that; they're just trying to break even. Versus a network of individual operators running validators on like an L1. You need to pay them to run that at a small profit. There's a margin that needs to be made there. So there's like an inherent cost there as well. One thing that, not to keep rambling here, but one other piece that got brought up on Twitter the other day was someone was tweeted out that the advantage of an L2 is that you don't have to pay inflation. I thought that was a bit of a silly take because there's no structural piece. There's no architecturally differentiated thing between an L1 and L2 that makes you have to or have to not pay inflation, right? Like again, it goes back to what I just said. The node count has a cost, and what you use to pay that cost isn't structurally different. Ethereum is moving towards a direction of minimum viable issuance, which would decrease inflation to near zero, because you can use fees to pay these validators, right? It costs like more to keep your fridge plugged in than to run an Ethereum validator today. Who knows? Maybe that'll change, but point being. And so, and L2s aren't like immune to inflation. You can inflate for any reason, whether it be decentralizing the sequencer set, or Arbitrum has a live proposal right now for turning on inflation to like incentivize governance activity. So there's not like a structural difference between an L1 and an L2 that makes you immune to inflation or like requiring inflation either. I think that's a worthy thing to point out.
I will also add that I feel like if you're an L1, you have to be very careful with your token, because you're constantly worried about the inflation side, and that inflation you want to exclusively almost give to like validators, unless you're like a very new chain. But I feel like L2s are very loosey-goosey with their money, and they're just like, oh, here's you minted an NFT, here's 50,000 of our token.
Right. And I think the important note there is that the token for L1s has historically been used to bootstrap the validator set, right? Like you're basically saying, hey, we're not going to make any fees in the near term, so we have to pay you as something, so we're going to use the token. The idea being that once you start making fees and you have like a viable business model and people want to like pay to use the service you're offering, then you don't need the inflation piece, right? Like that's kind of the end state you need to get to. Now you look at a lot of app chains and they never got that viable business model that people wanted to use. So they're left inflating to all hell. And then you pull up the token chart, you're like, app chains are a failure. Like, no, the business was a failure. It's not about the model, it's about the business.
I will jump in here and say that, like, for layer 2 tokens, they are pretty loose with their money, but I don't think that that's going to, like, remain the case in the foreseeable future, maybe even this year.
But why not? Because the only differentiator between these L2s is their ecosystem, and the only way that they've been able to like incentivize this ecosystem is just by giving out money. Like, unless they can do something else, which they haven't been able to yet, then they're just going to keep spending money. And if they don't spend money, then I mean, like, there's some that have certain ecosystems that are like differentiated, like Arbitrum and Base. They have different apps on them, but at the end of the day, if you're a new app launching and there's no, like, they're both the EVM, like Base has some optimizations, but at the end of the day, you might as well just launch on Arbitrum. Why would you go to one over the other? It's not because Brian's ball, it's because he's gonna give you 150 to 200 million XYZ. The same with Arbitrum. Like, they're giving out free money. If you're a dev, you'll go to the free money. It makes sense. So I don't see it like changing unless there's some drastic difference. And I think that's one of the things is like with the L2s that has been an issue is there's no differentiator. Like Solana very clearly has a differentiator. Aptos and Sui even have a differentiator, even though like they're not doing particularly well. But these L2s are all the same. Not like there's some small differences, but it's not like tangible enough for a developer. I think it's more tangible for the user.
Like, how else are they going to, I guess, bring value to the token, or how else are they going to differentiate their like
Their product.
ecosystems?
Yeah, their ecosystem.
Yeah, that right there is a difficult question that I honestly no clue. I mean, I was also thinking about with all these interoperability standards coming out. I wonder if like if competition will get like worse between rollups, because at that point unless you're actively trying to maintain a walled garden, it just seems like it would just over time like become worse. I don't know.
That's the goal, no? Is like to make it undifferentiated as possible. But it doesn't make any sense for the L2 because they make money off of whatever app is used on their thing. Like, it's stupid that Arbitrum spent 85 mil on users, but it's like the only way that they can try, and then they make 12 mil in revenue, and they're like, oh, we lost 82%, but in the long term, it might all be okay. It's like there's no other way to do it. And interoperability, it only gets better and better, so it doesn't matter if a product is on Optimism or Arbitrum, but from the product side, like from Arbitrum and Optimism side, it very much does matter because these are businesses and they need to make money somehow, and to make money they need to spend money because they don't have any other way to do it.
And the other side that it matters from is the protocol builder, right? The person building the business is you have to pick. And so Mike Ippolito actually had a great quote one time, and it was like, the escape hatch is great until for the user, but for the business, I can't port my entire protocol down through this escape hatch and move it to the next chain. Like you have to kind of pick that original community, go out and build on that platform, and you can expand to be a multi-chain protocol. There's no doubt about that. I'm not trying to say you can't do that, but your initial build kind of has to pick one of these popular ecosystems. I think that's why there's probably a power law that plays out here. Base and Arbitrum are definitely the front runners today, but there's going to be continued shots at this. And taking it back to what we talked about earlier, like these are all EVM L2s that are still improving their tech. Like Base has made some minor optimizations today. Like they're by far doing the most gas per second and transactions per second consistently. And they are probably going to be the first chain to integrate Reth, Paradigm's new client built in Rust. And that can dramatically increase the transaction throughput there. And so they seem like the front runner to have the best tech in the L2 space in the near term. And so you pair like the best tech with probably the best distribution engine in Coinbase, it starts making like a really, really compelling case. And so if you're Arbitrum, you're kind of left wondering like, what's your advantage here? And to be fair, Arbitrum probably has the best tech today. They were long the cheapest chain in the L2 space. They're still very, very cheap. It's just a question of like scalability for them. And I think they're doing the most on the MEV side with Time Boost, and on the developer side with Stylus. Those are both really, really, really interesting. Darren, do you know when Time Boost goes live?
It's not up for voting yet, so we still have it at minimum a month. So there's also the Orbit chain stuff. I mean, Orbit chains, there's about like 50 of them, right? Only
There's
like half of those
50
are
of them.
they're only like half of them are like live right now. A lot of the other ones are still like ongoing in development, stuff like that. So I think that there might be more than like meets the eye for Arbitrum, but of course the governance guy is going to say that.
I don't know. I kind of write the activity from what do they call it? AnyTrust, Arbitrum AnyTrust. Yeah. So when you're using Arbitrum AnyTrust, I kind of just discount that activity to zero. Like I don't know. That's just like not a permissionless. I guess it is permissionless, but it's just not. That's not what we're trying to build here. I don't love the whole idea of off-chain DA being like this magical solution. So you pull up, rollups.wtf built by the Conduit guys, excellent team, 10 out of 10 recommend. And like 9 times out of 10, the chains with the most throughput are either like Xi or Proof of Play, which both have this off-chain DA. And it's challenging for me to take that activity at face value and be like, yep, this is the Ethereum scaling we sought out to go get after.
You know what? I want to talk about that off-chain scaling, off-chain DA layer thing, because Redstone also did something like that, and it's basically them like putting it on a not centralized, but they're
It's that
just
Google
focusing
Sheets
on the
DA,
server.
baby.
Yes, sir. Yes, sir. But it makes so much sense. Like if you're gaming, if like who cares if you're just doing gaming?
Agreed. Right,
Like,
but I don't know. Maybe I'm taking a Twitter debate to heart too much here, but someone was like we were arguing about the scalability of Ethereum's roadmap. And like you just can't count those. That's not scaling Ethereum.
What do you mean you can't
scaling
count
Ethereum? That's not scaling Ethereum. That has no benefit to Ethereum in any capacity.
What's up, guys? For this week's Nillion Snippet, I'm joined by Lucas, who's the head of ecosystem and AI strategy over there. Thanks for joining us, Lucas.
Thanks for having me.
Just to start us off, what's Nillion and what is so exciting about it?
Yeah, I mean, Nillion is really a paradigm shift in how we think about computing today. So when we talk about privacy today, usually refer to storing data privately addressed, refer to transferring data privately in transit. But during the compute time, data is always actually fully exposed. There is no privacy and security protection. And Nillion as the blind computation network is really fundamentally changing that. So it enables you to basically encrypt data locally on your device, send it to a decentralized network of nodes. They can blindly store and process the information. So that's where the name blind computation comes from. They don't see anything about the underlying data, but nonetheless, they're able to extremely securely store it and at the same time process the information to generate an output, which can then be reconstructed, decrypted by a specified party. So fundamentally, it's giving rise to a private cloud environment and new design space for decentralized infrastructure, with the big vision being to decentralize trust for high value data, sensitive data, personal data, private data, right? So we decentralize trust for arguably financial value with Bitcoin, programmability, and public data more broadly with Ethereum. And Nillion's aim is to make the next step there and also decentralizing trust for particularly sensitive information, which I'm really excited about and I think will open up a lot of new use cases in verticals and horizontals that we haven't seen yet in crypto.
That's super exciting. And what do you specifically focus on at Nillion? What does head of ecosystem and AI strategy entail?
Yeah, so I'm part of the founding team of Nillion. So I've been part of the project since the beginning. So I've worked on lots of different things from cryptoeconomics, governance, ideation, but also product. And right now, my main focus, next to other things, but my main focus is heading up the ecosystem. So what that specifically means is I source projects, I curate them, and then support them on their journey in building on a Nillion network. So that includes bigger infrastructure partners, setting up those collaboration partnership, integration partnerships with them, including existing blockchains, but also other off-chain infrastructure projects and obviously enterprises and the likes. But next to that, also smaller pre-seed, seed stage startups, Series A startups in the crypto space, but also in the Web2 space, and working with them closely to identify the synergies that exist with their application and the Nillion network, and then support them in their build as well as they start deploying on our network. So that's essentially what my main focus is. Obviously, many other things as well, but that's kind of my main focus at Nillion today.
Perfect. And what is your exact approach as Nillion in building a strong ecosystem? What are some concrete steps that you guys have taken and are taking currently?
Yeah, I mean, we had a really strong product mindset since the beginning of their journey, right? And I think this is a pretty unique thing actually in crypto. Like we started the journey 2.5 years ago, but actually since the beginning 2.5 years ago, we spent a lot of time talking to founders. We spent a lot of time talking to decentralized applications as well as Web2 companies to identify how they would integrate blind computation into their tech stack, right? Where do you need security? Where do you need privacy? How does public, immutable, verifiable, transparent storage and compute on blockchains harmonize with the blind compute and blind storage aspect of the Nillion network? And by spending a lot of that time talking to founders already that early, we shaped our product roadmap, we shaped our ecosystem roadmap and strategy in line with that to introduce features and functionality that some of those applications really needed, right? So we were extremely market driven, and as a consequence, enabled projects early on, pre-public network, pre-public testnet, and the likes, to access our internal network and supporting them in their build on that journey, right? And specifically, what we have set up for that is what we call the Nillion Nucleus program. The Nillion Nucleus program essentially is the support program for builders. We support them with obviously the technical support, with regular calls and support on a day-to-day basis. There is a business and marketing aspect to this as well, and there's also a financial component to this that helps projects early on in our early network to essentially utilize some of the functionality that's now unlocked with the Nillion network. That is a key aspect of it, but next to that, obviously, there is a strong collaboration as well with the development relationships aspect of the team and the network in essentially enabling the right hackathons and bounties to be developed such that the ecosystem develops the right applications that we believe are good applications, we believe have good synergies with respect to the network. And then there's also a strong focus on infrastructure integrations, which we will release shortly. And we're really excited about some of the biggest names that we will partner with in the next couple of weeks, and essentially enabling those infrastructure projects to access blind computation in the network. And obviously that's a key ecosystem strategy as well, because if you have an infrastructure integration, you open up complete new design space for a lot of decentralized applications or traditional enterprises to access the Nillion network. So it's really multifaceted. So I would say it's Nucleus, it's developer relationship alignment in terms of making sure that hackathons and bounties are set correctly. And then finally, it's also infra integrations that will open up a lot of new use cases and design space to see a flourishing ecosystem, which is really exciting.
Perfect. Yeah, it sounds like you guys are putting in a lot of effort into fostering a strong ecosystem. How do you view that ecosystem develop over the next few years? What are some apps, use cases that you are particularly excited about?
Yeah, I mean, fundamentally, it's exciting to see the new design space that I briefly touched on before that we open up as the Nillion network, right? There is now for the first time really the opportunity for decentralized applications to tap into blind computation and blind storage. So enabling decentralized applications on existing layer one ecosystems and other decentralized infrastructure systems to connect to the Nillion network seamlessly is super exciting, because that will open up a lot of new use cases and open up a black box that we haven't seen before. So Nillion becoming the co-processor, the middleware for existing blockchain infrastructure, I think will be really exciting. But the next to that, we also see completely new verticals and horizontals that we haven't seen in crypto before, real world use cases, and specifically in AI, a lot of use cases, because if you look at AI specifically, there is a lot of interaction happening today with those systems where we share a lot of very sensitive information, right? So every time you send a prompt to an LLM, to a large language model, an AI company, you leak a lot of your information, right? You have to trust them that they don't train the models. You have to trust them that they don't leak anything, share, exploit it. And also you leak a lot of information every time you process your data. So seeing applications building today already in Nillion to essentially facilitate a private cloud environment where AI implementations are happening in a fully privacy-preserving manner, where nobody can see anything about the underlying data, is really fascinating. It's really exciting for me. And I think we'll have a lot of exciting use cases coming out of in the next months and years to come, because it is what we need. It is what we need to protect ourselves from. We can't have just a single company or a single individual that has access to all of our data, and creating a trustless, credible, neutral, decentralized infrastructure system to train models, to run models, in a properly privacy-preserving manner, I think is critical, and we'll see a lot of use cases coming out of it. And we already see today exciting companies building in the self-sovereign AI space. We see companies building in the federal learning AI use case spectrum, and many others that's started to deploy, which is exciting. But next to that, privacy and security are critical, not just in AI. They're critical in healthcare. They're critical in dating. They're critical in DeFi. Today, for instance, if we look at DeFi specifically, every time you submit a trade, you leak a lot of the information, right? Or you have to trust a single individual or a single entity not to front run you. And that's a tax that users pay that they're not even aware of. So creating a blind trade execution engine, right, private dog pools or the likes, that can enable you to submit trades in a fully encrypted manner and protect you from being front run is exciting to see. We see some developers that are in the journey of developing those solutions. I think there's a lot more design space that will be unlocked in the next months and years to come across lots of different DeFi implementations that will essentially access some of the blind competing functionality. So I would say it's AI, it's DeFi, but then also, as I said, a lot of real-world use cases are in healthcare. We see a company today that is essentially storing and processing genomic data in the network, which is completely new design space that we haven't seen in crypto before. Because it's very sensitive information, right? It's private information. It's arguably the most high value data that one can have. And making sure this is protected when it's stored and protected also when it's processed and analyzed is fascinating and will open up complete new discoveries and insights that, frankly speaking, can change not just the crypto space and the use cases that are possible with decentralized infrastructure, but also much more broadly what's possible with privacy protection in traditional enterprise and healthcare specifically. So anytime security and privacy are critical, the network could become exciting new infrastructure, and I'm really excited to see lots and lots of applications across lots of verticals and horizontals building on it.
Perfect. That all sounds really exciting. Protecting genomics and healthcare is something that I hadn't thought about, but it makes a lot of sense. Thanks for coming on and evangelizing Nillion.
Thanks a lot. Appreciate the invite, and looking forward to following you guys with all the other interviews coming up soon as well.
I did want to ask something about like in reference to time boost on Arbitrum. I've been thinking about like what's been going on with Polygon lately. So you guys know Fastlane Labs and how they're like essentially just like Jito on Polygon. They like run MEV strategies, right? So they're building a cross-chain execution engine, or that's what they're calling it. And I've been
Is this Atlas or is it something different?
This is Atlas, I believe. That's what they're calling it. And I was thinking with Polygon's recent like ag layer like product for like there would be like a relayer network, right? And with this relayer network, you could say that there's like REV or relayer extractable value. And I was wondering if like the cross-chain execution engine from Fastlane, like if there's like some overlap there, like could something like Arbitrum have its own like cross-chain execution engine and like take like value from that as well and couple that with like relayer extractable value? I don't know. This is like a lot of like me throwing like technical terms out there, seeing if it sticks. But yeah. Any thoughts?
I haven't looked into that at all. That's interesting. I mean, you're definitely going to see. So I can only answer broadly here, but I think you're definitely going to see MEV capture move up the stack towards apps. Like everyone has long talked about that, but now you're actually seeing it. Oracles were kind of first with this OEV or Oracle extractable value. You're seeing that those hit production. I think was it UMA has a product for that, and then I think Pith was recently talking about theirs. And so you do see things moving in that direction to the app layer, and maybe even not value capture, but MEV capture, but MEV mitigation. Yeah, Paradigm and Eugene from Ellipsis co-authored a piece on how to like create an AMM that basically prevented sandwiches from occurring or severely limited the amount of sandwiches that can occur. So I do think in general, you're going to see apps think about MEV a little bit more.
I guess what I'm trying to say, what would be better for me to say is like with this, like hypothetically and super hypothetically, if Arbitrum had like a relay network, right? The relay network would have like the rights, quote unquote, on the value, but happening between Arbitrum and another chain, or it would be able to like gatekeep that value, and that's just like what I was thinking. Like, is it possible for a chain to like to have its own interoperability solution here, like, or for an L2 to have its own interoperability solution, and then like extract value from that and use that to gatekeep. So like instead of having a walled garden, you're like almost paying people to use this solution or something. I doubt it, but yeah.
But it just keeps just getting bigger, no? Like the interoperability issues are still there. It's just that instead of like between everything, it's like
Define's still there.
What's still there?
Define like what you mean by like the interoperability solutions get.
The issue is still there. You still can't use it properly. It's like even if you like, let's say like on all like okay, let's take Ag layer because Ag layer is the only one that's live. If you are a chain that is opt into the Ag layer, you're technically like all assets are kind of the same. They have the same risk profiles. No, like if you hold it on mode or if you hold it on like the Polygon POS, that's what I understand the Ag layer as.
I mean, that's like the end state for the Ag layer. I mean, currently it's on V1, so like cross chain transactions are like 45 minutes. So I can't really I wouldn't say that's a perfect example right now. Maybe in 2025.
I mean, I think what Darren is asking is like a good point. I mean, I think Optimism with the super chain is really attempting to do this. You know, I saw, and I don't think these features are out yet, but I've seen like some preview demos of like being able to kind of select and slide and choose, you know, to send USDC, for example, from like your different, you know, super chain addresses all in like one transaction. So there's a possibility that like you could build out a feature set that like leverages, if you have this L2, L3, you know, they have their super chain ecosystem, you have your orbit chain ecosystem, and you have some way to like tie all those together, and you can like offer services to kind of integrate those really well and then like take some fees off the top. There could be a mechanism there, but I agree with you as well, Bach. Like, we're running into this problem where the business model has been to like, okay, we take all the activity and we put it here, and it's like, again, just like this generalized ecosystem that doesn't, it's like, hey, come do your things here, just generally, and not going after something unique or specific. And the main goal was like, you know, let's improve TPS, let's improve throughput. And then what they say is like, okay, but the second layer wasn't enough, so now we have to go to the third one. And again, it's like, okay, you can put your apps or even maybe even your generalized layers down here. And each time we take a whole chunk of the like value that drives out of the picture because we're scaling, you know, another 10, 100,000x, whatever the number is. So the business model just gets harder and harder each time. So I think there's trade-offs both ways. And it's like to the point around really developing like a differentiated business model. It's hard to have a differentiated business model when the business model is like, this is our generalized ecosystem, come build here, it's general, and then it's open source and like anyone can go just drop and build their own generalized ecosystem, you know, in the exact same way. And then you have to compete over users and you don't really have anything, there's nothing really driving metrics at all, unless you have some other thing that differentiates you, like maybe just your raw tech is better.
Yeah, I mean, it comes down to like real products being built, and then you get that moat of like, hey, you know, I want to be with this product, or I want my product to interact with this product atomically. And so that makes more sense for DeFi than like a lot of other things like consumer, or even payments. But yeah, it's like, how do you get real valid builders onto your platform?
You know what? They've done that. Like Polygon has Polymarket, and there's still nothing but Polymarket on that chain. I don't even know why Polymarket's on it. I don't know why they named it after Polygon as well. Like, it's not that good of a. Either way, it's like, and nobody's still building on it, even though they have that like killer consumer app. I mean, whatever. It's like election driven, okay, but
Also, I like Polymarket. I think prediction markets are cool. And it is interesting to think about like where and why they're building. It's interesting, like Polymarket doesn't drive a ton of value down to the base layer either, which is kind of typical for like a more consumer facing app. That's not like DeFi and bot activity is what's going to drive value in the near term for the base layers. But specifically with Polymarket, everyone's called it like the breakout app of the cycle because the volume has been like increasing. There's only like 6,000 traders per day, which isn't bad. I'm not saying it's bad, but that's not like this main. Everyone was like talking about it as if everyone in the world has used this thing. I just find that really, really interesting. That again, there's like a couple thousand people trading on this platform.
Yeah, but they're putting big money on it.
And they're just very loud, and it's, you know, it's appearing on like Spectator Index and all these like different like big news websites.
And their intern is really good. I think that's probably 95% of the reason why they're doing well is the intern.
Nate Silver's there now.
I don't know.
That's pretty impressive, actually. That's a good way.
Like we said earlier, you know, narratives, there's often the disconnect between the narratives and the fundamentals. And I think that I agree with you that like the narratives and fundamentals on Polymarket are in very different states than what people would have you suggest. But I also like the point that you made, Dan. Like, I think kind of circling back and like closing off the discussion on like these business drivers for like networks, it's what we see today is like individual apps tend to drive like most of the value in a lot of cases. Like if you look at Pump.Fun on Solana, they're running like millions for themselves in fees, and they're taking up large percentages of like overall DEX volumes on Sol, or as a relative percentage to overall DEX volume. So it's like apps have a lot of the power in this case. It's like the infra and the tech doesn't really have that much power, because if I have a good app and people want to use it, they're going to come get me. So wherever I'm built, as long as, you know, and so me as a builder, like it's really just up to me to like find that tech stack that enables this app to be, you know, fun, seamless, exciting, whatever it is. And I think that's kind of how the dynamics will remain. So for these like chains ecosystems, it's really going to come down to like, does the tech that we have and like whatever distribution mechanisms, the way that people can access us, is it meaningful for like those good apps to potentially be built? And if we're all just like building the same thing, then it's like, well, then they can build anywhere, and they're just going to like go to the cheapest cost if it's all the same tech.
Pump.Fun now has 0.1% of Solana, by the way, like total supply, just based off of their fees, which is ridiculous.
That's good business. That's what that is.
That's good business. That's good.
It's like 560K Sol in total fees earned.
Yeah.
What's and that in dollars?
It's like, it depends on the price, but yeah, I think around 80-90 million.
That's good business.
That's good for a couple of months. Yeah.
That's good business. Good. And imagine when Solana 10x's guaranteed NFA DYOR.
Not bad at all. Yeah, it's interesting. I'm just looking at Solana's total fees, total economic activity, MEV plus fees, over the past couple of weeks. And I was expecting more of like a pullback in activity given the recent price action. But there's also this like weird dynamic of, you know, when price pulls back, activity skyrockets, at least for the interim. But this is a weekly view here. And, you know, we are seeing like a decrease from this mid-July peak, but I don't know. Thought it was interesting that activity's kind of hung on.
It's a war zone right now. Like Pump.Fun is, I don't know how often you guys get in those types of trades or look on there, but just.
Let's talk about that Pump.Fun point, because I saw that tweet that was circulating around the idea that Pump.Fun is dead because it was like the graduation percentage of the number of tokens launched versus the number of tokens that made it into the Radium pool. So they hit that like minimum market cap requirement and got launched on Radium. It's like a super low percentage. I don't have the tweet up in front of me, but people were throwing this around, and the comments on like all of Pump.Fun's tweets now are all like visceral anger. And it seems like there's definitely been a sentiment flip, but I just looked at like DEX volumes and meme coin activity, and like nothing seems out of the ordinary, to be totally honest. And even looking at Sol USD volume, it actually hit a local high since March 2024. last week at about 5 billion, and that's like Sol USD on chain volume. And so I don't know. It seems like activity is not totally dying. I specifically excluded meme coin activity there because I was curious, like outside of that, what's happening. But yeah, I don't know. I'm curious if you guys have any thoughts on the graduation rate being so low and sort of like what's next for Pump Fun.
Yeah, I don't think it's surprising. I mean, I think if you just look at the dynamics of cost to deploy and like throughput, if you go back to, I think if you just look at the history of like chains where meme coins have existed, like Ethereum back in the day, you know, it was far more expensive to launch any singular token. So obviously you can't launch 1 million tokens in a month. It's just not possible. It's too expensive. Then, you know, people activity shifted over to like Binance Smart Chain. It shifted over to these other like alt L1s that came out that were cheaper, and more tokens were created as a result on the whole. And then if you go to Solana and the cost is like effectively near zero, there's nothing really stopping you at this point from making as many tokens as you want. So that might, that the result of that might be that, you know, that percentage of tokens that graduate and go to large market caps is going to trend closer to zero if you make more and more tokens. There, you know, there's not enough money in existence to like sustain 1 million or 1 billion or 1 trillion or 1 quadrillion tokens to like X market cap. It's just not possible. So I think that's really just a natural phenomenon of being able to create more tokens. Pump, they just had a recent announcement that it's now free to create a token, and then the first buyer of the token pays the creation cost. So I think it makes sense. It's really what they're trying to do is get people to use the product and create funny tickers, create funny memes, create funny, you know, things for other people to look at.
I think they had 1 million tokens created during the Elon Trump talk, or
One
maybe
for
more.
every concurrent listener.
Hello? Like, yeah, they're a tough.
I think those reactions are mainly because they're just like, yeah, there's not enough money to push everything up, and it's just not as easy as it used to be. Like, there was a time on Solana when you could just chuck money at stuff and then probably eventually be up 10x or at least break even like 2 weeks later because it was so frothy. And now it's become very diluted, and it's just become more and more sophisticated. Like, you have more bots, you have more people who are just sniping launches, even though like they've been doing that since the very beginning. It's now like even more competitive, even like the regular people, just because Telegram bots have become more and more sophisticated. They can basically like do everything that prior to this was like had a tech learning curve.
Yeah. I think this is a case where we've talked about narrative versus fundamentals. And I think in this case, it's actually the opposite, where there's a lot of negative narratives being played out on like meme coin trading is dying because of Pump, like Pump is dead because of XYZ. But if you look at their fees and their revenues, like it's growing, it's been consistently growing, even though we've been chopping sideways down, like as a market for the past several months. They've been up and to the right. So, and as a percentage of overall like activity on Solana, they've also been like either steady or increasing in depending on kind of where you look. So
Yeah, I kind of like thinking about it as though like we've all seen the spreadsheet someone did like a year, maybe 2 years ago, where they had like a meme coin portfolio where it was like $1,800 split everywhere, and all of it, almost all of it's up, like except like 3 entries, right? But that was because like that was so long ago. That was like 2 years ago, 3 years ago. It was, as Danny put it, much harder to create like a meme coin, and it was just like a much more time intensive process. Now you have people like Pump Fun is basically like, it's basically like creating a casino, and then everyone was making money on it so early because like there wasn't there weren't that many people going to the casino, and like they didn't, I guess there weren't like there wasn't an adjusted like rate for which people would like win or lose. But now with so many like meme coins out like being like created every day, it's basically matching what like a regular casino looks like, how often people like really win big. But yeah.
I mean, it's worse apparently according to the graduation stats than a regular casino. But another thing is, it's if it keeps going like this, it will actually die out. Like, this is probably like the 8th time I've tried to call the meme coin top and it never works out, but this time it will. No, but more seriously, if the feedback loop is just that you get on it and your coin doesn't graduate, because that bar is just going to get smaller and smaller. You know, before it was like every token went to 200 mil, and now like tokens can't get up to 26K or something. Then it's like people are just gonna, and then it'll self-regulate. Eventually, it'll come back. Like everything comes back.
There is something interesting here though, because you like these aren't binary actions that people are taking. It's not like you have to buy some token like pre
Yeah.
successful pool and then never sell it. Like you can buy and sell them while they're still on the platform. So it's like I would imagine that a lot, maybe there are people who are just like diamond handed, like I think this meme is the one of a million, and I buy and dang, I lost and now I'm never going to use pump fun again. But I would imagine a lot of this activity is probably similar to what people do when they like leverage trade on perps as well. It's like they're in, they're out, they're up, they're down. Like they think this is going to the moon. They think this is like dead forever. So they're dumping out of it. It's like, Margin Fi is launching just launched their long and short product on meme coins as well. So I think it really just taps into that like very high frequency, like high event driven, attention driven, like economy that people love to just like go crazy on.
We'll see how. Yeah, we'll see how all of this stuff develops. I'm very hopeful for real yield, DeFi, building blocks of the internet, of the new financial revolution coming back. Darren, don't do that to me, man. You're a guest on this podcast. You will not do that to me. I'm cutting him out. Mark, cut him out of the whole entire podcast, man.
I do have one question. Just like, how does this not loop back to like the higher requirements for that like Ethereum has, right? Like if the problem is too many people are launching meme coins, not enough meme coins are graduating. To me, that says that you have to raise the requirements, right?
Can I tell you what I think will happen? And I think this happens a lot, but people just don't notice it. When something becomes extremely popular, it just gets diluted out, and then there's no more return on it. People start giving up on it, and then eventually it comes back. We've seen it also like with anytime a narrative comes back, I feel like it somehow fits this pattern of like it became too popular, died out, and then it becomes popular again. So that's likely. I mean, Pump.fun might die. I really like the product. I've used it before, and I think that team is like really good. Like they've actually figured out exactly what to launch. So this is not a diss to them, but it might die. There'll be something else that comes back. It's just how cryptos generally worked.
Yeah, and I think maybe to add to it, I think we've seen a similar reaction in general to L2s, to new token launches this like the past 2 years. It's like there's way more tokens, there's way more options. They don't all just go 10x instantly because there's just so much more. People have to decide what they want to buy, and they have 1,000 options instead of 10. Like it's very different. So I think that's sort of like a natural outcome. You're going to get this like power law Pareto distribution of like a few things will do very well. And then like 90% of them, in the case of Pump Fund, if there's 1 million tokens deployed, you're going to have like 5 maybe or 10 that do really well. And then you'll have hundreds of thousands that like maybe get 10 or $2 or $1 in volume. So
thank you so much for coming on. I think we can wrap it up over there. Dan Smith, do you want to say something since you're back?
Always a pleasure, Baco. Always a pleasure. 0x Research is my favorite podcast.
Fantastic. Huge shout out to Danny and Darren also for coming on. Guys, make sure to buy if you want to go. You don't have to, but if you want to go to Permissionless, it's in Salt Lake City. Make sure to buy the tickets using 0x10 for 10% off your tickets. All right.
Come hang.
Today.
See y'all.